Okay, let's get right into the stock market technical analysis. We're going to go through the broad markets, look at some of these individual trade ideas I've been talking about for a while, and then we'll go ahead and wrap up. So, triple Qs, guys, a couple things. You can see here on the hourly chart. Let me get down to the hourly. Right here, zooming in. Last week, we pretty much were just in the steady march higher. Kind of this, it really seemed programmatic. It was just automatic buying every single little dip. Just a complete steady climb higher. To me, it looked like short covering. Didn't look like anything that I wanted to necessarily go long on. It definitely looked like something I would be more interested in shorting. On Friday, at the very end of the day, we broke that trend line. I did point that out. Now, again, it wasn't anything I was interested in taking. I didn't short on Friday because of I didn't like the fact that it broke that trend line right at the end of the day. Sorry, guys, text messages coming through. Right at the end of the day. But today, on Monday, and especially in the futures overnight, you could see we gapped down. And at that point, it did make sense, at least in my mind, to short for a move down to this hourly trend line. You can see here on the hourly, we've got support really coming off of the January 6th area. We've got a couple reactions. There's a third. And so it made sense. I figured we were going to probably drift down into that support line. Now, that's support. So I don't think we're going to break that ahead of the Fed and the earnings reports that come out on Thursday. So very big week in terms of market price action and events, headlines. And I didn't think we were going to break it. Now we might, but in general, I was just looking for a move from down there, from that gap down, pretty much down to there, which, it's got a little bit more to go, but not a whole lot. So we'll see. I'm still holding on to some shorts into the close. I did short the market, and I'm holding on to those. Not looking for too much more downside, but I think I'll probably hold some of these shorts into the Fed. Nothing huge, but a starter position, because if we're going to have the next leg lower in the bear market, then it'll start from right here. So I want to basically have some skin in the game at these levels. Now we could pop, again, we could rally, hit this and rally. Maybe anything can happen, over the next couple days. So I don't expect that we just completely crash or fall out of bed ahead of these events. Okay, so that's that. I think maybe a little more downside, maybe gap down. Somewhere we're really close to where we'll probably see a small bounce on the shorter time frame. But if I go down to the daily chart or out to this daily chart, this is the bigger picture. And we always want to understand the big picture before we look at the little small hourly chart. There's your bear market. We've been walking down this trend line. And as I zoom in, kind of two trend lines basically. Now we're above both of them for sure. You can see we're above that trend line and above that. So definitely above both bear market trend lines, but we're back below the 200 SMA. The 200 SMA today is at 292.25. We're down at 290. So we popped above it on Friday, and today gapped down and right back below it. So again, I think that if we can continue to sell off, probably not going to see, probably not going to see major selling leading up into Wednesday and Thursday, but we could continue to see some profit taking. Then I suspect we're going to gap back below these trend lines, and this price action up here is going to be a false breakout bull trap. Okay, and if that's true, then we're likely going to see that next leg lower in the bear market. Okay, at a minimum, maybe we come down and chop around a little bit, but and then of course, if we take out this level 250, it's about 260. You take that out, you see an impulsive break below that, and that most certainly, very high probability, would usher in a swift move down to 238. So that's still a level for me. It's still on watch. Again, we have to, the charts need to shape up. So again, name of the game, I'm not taking any large positions, but I do have some shorts for a play on the fact that maybe we are going to have the next leg lower in an ongoing bear market. Okay, here's Nasdaq futures, looking at the daily chart, same kind of look. You've got the downward trend line here. Now this one's very clean, all right? So I only have a single trend line. We're above that now, but you can see today closing back below the 200-day moving average. So again, that's bearish to see that we're back below. It just kind of popped above it, and the very next day sold back down below it. So, okay, that's bearish. And then if I look at the hourly, this is your upward channel we've been walking in since last week. Pretty much, overnight and today sold down close to the bottom of the channel. Not quite there, but definitely close. So there's support down there. This is where the buyers will try to put up a fight. Who knows if they actually can sustain one, but the main takeaway is as we were popping up on Friday, and I talked about this on the Friday video, and it really on the Saturday live stream, we kept that negative divergence intact. And that was a real tell for me that this pop-up here was likely going to get sold into. And sure enough, it was. So that's it. We're at support. If we start breaking back below, especially going back to the daily chart here, especially if we can fall back below this blue trend line right here, that's going to be a very strong sell signal because we will have fallen back within the bear trend. Okay, and that would likely usher in the next leg lower. IWM, small caps, again, here's your bear trend. Started back in January of 21, and well above that. You can see we're definitely above that trend there. On the daily chart, I don't see any real negative divergences. If I zoom in, I mean, we can call this a negative divergence because it's an equal high. You'll see here you have a high and you have an equal high, and then zooming out to back out to the price, you'll see here there's your two equal highs on the PPO, and we have a slightly higher high right there. Okay, or maybe not quite a higher high, but very close. And so we'll call that negative divergence on the daily. I don't see it super clean on the RSI except for just showing up right there. So this could extend. We'll see. But in general, at resistance, decent size resistance right there at 190. You can see all the tags of support from the past, and then they were resistance. There's several tags, and we're there at resistance now. So we'll see. I think we could break this. We're kind of marching up this little trend line here. There's a short-term trend line. We're basically at support right there. All right. We break that. We should head down to this lower trend line, which as of right now is about 182-ish. And then, of course, back on the daily, you fall back below this red trend line. That's your bear market. And that's going to signal, that'll be very bearish. All right, let's run through some individual trade ideas. Real quick, guys, if you're finding value, drop me a thumbs up. I do appreciate that. Leave a comment, maybe a stock pick you want me to look at. I do browse the comments. And then additionally, if you're interested in learning this as a skill set and you want to take an affordable stock market technical analysis course, link in the description below. I put together, 4 to 5 videos as well as a checklist on how to find what to look for high probability setups and how to read the charts and everything that I teach. So link in the description below on that if you're interested. And then the private member group, I wasn't too active in there today. Again, because we've got the Fed and the major earnings coming in. For me, it's, I don't want to get too crazy on any positions. I am positioned short right now pretty much across the board. Either individual trade ideas or just small shorts on the broad markets, but that could completely change after those headlines, after the Fed and the earnings report. So best to keep things small, and I'll probably be a little less active leading up into those meetings in the private group. But if you're interested, link in the description below on that group. Okay, run through these individual trade ideas real quick. Here's CAT. We have earnings coming up, I think tomorrow. Yeah, earnings are coming up tomorrow. I don't know if it's before the bell or after the bell. I'd have to check. I think it's before the bell. So wherever this is going to go, it's going to go. Now, the negative divergence that's in play, and we're basically right there at that trend line, kind of back testing basically, but the negative divergence is telling me we're going to break to the downside. We're going to have bad earnings. So we'll see. That's how that is set up. If I go down to the hourly, you can see they basically today broke it back below that trend line. So just towards the end of the week, they kind of traded above it and back below we are. So we'll see now. To me, it looks like earnings are going to come out negative and this thing's going to gap down. That's the best I can tell for right now. DHI. All right, this is a home builder. Again, we basically, here's your trend line. We broke, and all of last week we were kind of back testing, starting to lose some momentum. And the momentum indicators have been showing that negative divergence as we've basically been losing momentum in the indicators, but price hasn't shown up, and now it's starting to show up in price. And this is what we want to look for. The momentum indicators often lead price. And so that's kind of what they're telling us, and selling today. And I think we probably are going to continue lower. All right, next level support 91.60. You take that out, you should head down to, I've got a couple levels. I mean, for me, my favorite level, I think the most objective level is just right down there at about 79. Okay, there's a gap to fill. You can see from back here the 200-day moving average is down there. That would be my trade. That's my preferred level for right now. So, I think from where we're at right now, a drop down there, it's about 16%, and I like the trade still. So we're staying with this one. Merck broke support last week, so we had a sell signal last week. Today, I mean, as I zoom in, you can see there it is, basically just an inside day. So no change. Inside days are just continuation days typically. So the trend right now is down. The near-term trend is down, and today just indicates that we're going to continue down. So as of right now, I like this one still short. My target right now is really the 200-day moving average, simple moving average, and 95 level. So that's where we're going. I'm pretty confident on that. We've got down to there. It's about 10%. So I'm staying short on that one. Okay, sorry, I had to take a phone call, so I'm not exactly sure where I left off, but let's get right back into it. NVIDIA. So here's NVIDIA on the hourly chart, and it's very similar to triple Qs. It's a tech stock. You've got a support line right there, and you can see today we pretty much closed right at it. So whether we break that or not, I'm not exactly sure, but in general, I don't see NVIDIA going too far ahead of this week's event, so that might be, I don't know. I would expect maybe a bounce here. We'll see. On NVIDIA, though, we do have divergence. We've got negative divergence right there. Okay, so we have a divergent high. We've got an uptrend to like. I think there's a break coming, whether it happens, tomorrow or maybe after the Fed. That I'm not able to tell. So we will move on. Vertex. Okay, so on the daily chart, I did adjust my trend line just slightly, but here's the pattern I have. I think there's a nice clean bearish rising wedge. We've got clean bearish divergence on the daily that's been building for quite a while. And you can see just yesterday, we popped up and made a divergent high and a back test. Okay, so there it is. Perfect back test of that bearish rising wedge. And a new high, which is a divergent high. So I suspect that this is an objective area to short. We're at at or near the end of the rally in this one, and we should head lower. All right, I'm looking for a longer term swing trade on this one. Ultimately, I think we come, the two levels that I have on this one, let me kind of mark them out, are right here. You've got, obviously you have the former lows, so that might prove to be a level, but I think there's a level of support about 273.50 and then all the way down here at 244. You can see if I roll out, this is your uptrend line going back to 2011. Okay, so your long-term bull market, and you can see we've hit this, here's another cluster here. So I'm looking for, at a minimum, a move down to that trend line. Okay, I think that would be a very nice objective area to short down to. And then once we're down there, it's hard to say what happens, but I like this as a potential move. If I also take the widest part of this bearish rising wedge, mark it out, it is there at the time of the breakdown, it is setting us up for a move down to that 244, that trend line down there. So that's my objective target for right now. And from where we're at, that is a drop of potentially 22%. So I favor that. And WMG, on the daily chart, we had a sell signal. We've been back testing for a few weeks now. starting to kind of roll over. We could continue to back test. There's no indication that we have a complete and impulsive rejection. That likely will come on earnings, okay? So that's coming up here in a couple weeks. February 9th, it looks like. We have negative divergence on the daily, so as a setup, it's still there. It's a good setup. Looks like we are, just back testing, and we should start to roll lower. My two targets for now are 31.35 and then down here to 27.28 with likely some sort of a reaction at the 200-day moving average. So from where we're at right now, just down to the 200 is about 20%, down to that final target about 25%. That is my trade setup for now on this one. I still like it, still remaining short. Okay, so I feel like I've gone through most of the stuff. I'll go into more detail. The currencies, gold, and we'll want to look at gold and the dollar as we approach the Fed day on Wednesday, because they are expected to raise interest rates 25 basis points. So we'll look at the dollar and interest rates and all that, because the Fed's likely going to move those markets. Until then, I'm going to go ahead and wrap up, guys. Drop me a thumbs up on your way out. Check out the course. Join the private member group if interested. And I'll